Hello traders, it's Graham here from Kilted Trading. I know it's been a little while since we've had an update, so I just thought I'd post a few things that I've been looking at and try and keep it fairly short, but there's a few things we want to get through, so I'll try and move through that as quickly as I can. So 6 things I've listed down that we should have a look at. I've posted recently on the YouTube channel the S&P 500. It's the gift that keeps giving at the moment. We'll have a look at that. We'll look at some other indicators. I'm looking to assist you guys with your trading. So I've got the Kilted Rsi and the Kilted Auto Fib tool that we'll have a look at. Obviously I'm based in Melbourne, Australia, so we'll have a look at the Australian All Ordinaries. That's the index here for the stock market. See how that's faring. We'll look at copper and its correlation to the economy. It's always important, guys, to have a look at correlations with various things in the market. Once you understand that, you become a much better trader. And especially around how markets are moving at the moment, we'll look at risk management, which is most important. And that will be a nice segue into the trade calls that we've had so far and where we sit. And that's when you'll realise why risk management is so important. And we'll finish up very quickly with what we're looking at here at Kilted Trading and what we're also thinking about, I guess, with some services that we can bring to you guys that are maybe not so close to the market and have enough time to actually look and use maybe some of our indicators and what other services we can bring to you guys. So let's get to it. So the S&P 500, as I said before, it is the gift that keeps giving. It is incredible. Nothing really makes sense to me in terms of why it's where it is at the moment. If you look at what's happening in America, you've got the riots, you've got the virus, and still impacting the economy. You've got a lot of stocks that are overvalued, yet the S&P 500 just continues to rise. If you'd watched the news consistently for the last probably 2 weeks and asked me, where you think if I'd asked you where you think the economy was at there, you think it'd be crashing and burning, right? But that's a good lesson. When we look at charts, you trade what you see, not the news, and certainly we've got a continuation of this bull run. Look at it, it just continues to go up. We've obviously seen this large spike last night and into the close as well with the jobs report. So the analysts were way off. They're predicting I think it was 19% unemployment, and they came in at 13.4%. I think it was around 13%. So that's why the stock market closed out higher at the end of the week, which seems to be a bit of a repeating pattern. And Jerome Powell, he is the gift to the market that just keeps giving. So the Fed are continuing to print money. So a couple of things we want to look at here. We've got the Kilted Strength Meter here. It's obviously pointing bullish as well, and even you've seen this uptick. We're just about to cross the thin white line here, which shows this strong run. You've got 9 days straight, guys, where it's just the markets continue to go up, and then you've had this little breather, as I would call it, with this little bit of a pullback, which is really not much. It's it's even painted a long inside bar, which means it's still bullish off this parent candle here, and yeah, sure enough, it's it's pointed north again. So the Kilted Rsi is something I've been working on. It was invented or created by a guy, you guys can Google it as well, by an absolute genius by the name of Jai Wells Wilder, who was an engineer and a mathematician, and he came up with the RSI indicator. It is a very good indicator, but a lot of people don't use it or understand it probably to its full potential. So I'll go over quickly what we've looking and what I'm looking to bring to you guys. It's especially good in the stock market. So the two blue bands here, very quickly, this is when you have a bull market. Generally the RSI will move between these two bands. So you've got your oversold up here and your overbought up on the upper level and oversold down on the bottom level. So as I say, a bull market sort of tends to oscillate between here, and in your bear market you've got the RSI typically moving around down the bottom here. So you can see sort of how accurate this is. If we look at where price has gone here, we've got this sort of bull run, so it's predominantly moves around between the blue lines, and then you've had the blip, which is the this massive downturn that we saw in March with the coronavirus when it hit in the US. But look how accurate it is. It's hit down here and it's kind of found its bottom, okay, and then it's ticked back up again, and that's this bull run here. Now what this is basically telling you is when the RSI is pointing, so we've got this bull run again, but as you can see here guys, we're coming back up nearing this sort of resistance level, okay. So look, it's got a bit to run yet, and that's certainly what the charts are telling me. With this other indicator that I have here, which is I'm calling the Kilted Auto Fib. So it's basically using Fibonacci. For those who are familiar with Fibonacci retracements, it's drawn it automatically and pointing in some I guess bespoke values that Kilted Trading are using around the Fibonacci sort of levels that we use here, which is and we've color matched it. So usually you can see, let's talk about this very briefly. So you can see usually you'll get normally a sort of pull back into the 50 area or 50% retracement here on the Fibonacci levels, but look at this thing go. It's only pulled back 23% and then it's taken off again. Do you see how that's held this level here, this Fibonacci level? And we basically match anywhere here in the red is basically going to, the prediction is that it's going to go up here. So we're looking still to the upside here. It's definitely a market you don't want to be shorting, that's for sure. Well, the Fed are printing money and you've got this continued strength to the upside. It's looking like it's going to come up around the 3,400 sort of mark, certainly, is what it's predicting. Will it get there? Not quite sure. Am I looking to trade it? Probably not. It's just a bit of a roller coaster, the S&P 500. Look, for me at Kilted Trading, we're looking for it to roll over. We're looking for history to repeat itself, for it to run out of puff, and reality kicks in that prices just, with the way the things are at the moment, with assets overpriced, stocks overpriced, it's going to roll over at some time or at some point. This is why we've got this trend line here. Once it starts to show a bit of exhaustion, which is going to when the RSI is going to point around here, that's where we're going to be looking to short the market. When that happens, I'll be sure to let you guys know, but that's not right now. This thing is continue to go north. So that's S&P 500. Nice segue into the All Ords. You'll see that the All Ords, so just picture this in your head for a couple of seconds. 1, 2, 3. Okay, let's flick over to the All Ordinaries. Now we can see it follows a very similar pattern to the S&P 500, and that's ticked up. Have I been trading it? Yes, I have, but I've been trading it on the lower time frames. Scalping the market, doing very well there. Has it ticked over for a buy signal on our Kilted Trend Pilot? No, it hasn't. We can see the blue does not match a blue here, so we're out the market. We're probably more interested in looking at short here. Same position. I'm looking for the market to sort of roll over at some point. Whether it does or not, whether it continues to go north, who really knows. Certainly not looking to go long at the moment. Which brings us to our next point, which is the correlation with copper, which is always a very interesting one. So generally the way copper moves is really in line with the sort of stock indexes. So we saw the US 500 come down, and then we've had this sort of bull run. We've seen the All ORDS do pretty much exactly the same thing, massive downturn. Then we're springing back up again. Is this just a pullback? Who knows? And then we go further south, or we keep going, and it's, you know, this is a pullback here. Who really knows? But when you look at the correlation of copper, it is quite amazing, really. So you've had this similar, look at this, it's almost 1 for 1, right? So you've had this downturn, look what's happened next. We've gotten it almost watched 1 to 1. It's almost a mirror view of the stock indexes. So is copper something that I trade? No, it's not. Should I be? Yeah, I'm interested now. I'm looking interested to get back into taking some copper trades, but not right now. We're looking at some overhead resistance here. I'll be looking for price action around this level in terms of, do we roll over? Remember what I just said about the two indexes? They're looking to perhaps roll over. We're certainly seeing some resistance here. So will we roll over here or push through this level? I'm going to wait to see what price action does here. Okay, so we've covered S&P 500, we've covered the All ORDS in terms of where I think that's going and what it's looking like. The correlation with copper and the economy. Now we're going to go to probably the most important thing that I want to cover, guys, which really does keep us out of trouble. Markets are still volatile, and the VIX is still up there in terms of the, you know, the fear factor in the market. It's still pretty high. But I wanted to quickly cover something that you guys who are predominantly in Forex. Now, I use Pepperstone, that's my broker here in Australia. They are fantastic. Shout out to these guys. I will reach out to Pepperstone to see if I can get any deals going for you guys who perhaps are looking to start some Forex trading, you know, get some nice incentives for you guys there. But until then, I'll show you what I use for risk management, which is really my go-to. I have to admit, I would not be trading if I didn't have a risk calculator, some easy method of using or calculating lot sizes in Forex. Once you get started in Forex, you realize that you really need to know what you're about and what risk you have on the table, especially when you're trading things like gold. You know, if you don't get your lot size right, and I have stressed this a few times, it can wipe out your account. It really can. So this is one of my go-to risk management tools, which I wanted to cover really quickly. It is super simple, easy, and you basically with Pepperstone, and look, there are a few other brokers that use the auto chartist tool, which is this is part of, is a freebie as part of their tool set. Pepperstone have a really rich tool set which they provide, and auto chartist is one of them, and this little this tool, which is what I love, gives you that visibility of what you're risking. So you drag basically any sort of indicator, you drag it over, and this is where all the magic comes. So it can predict, you know, prices as well around, you know, based on where price has been in the past. It'll predict where it's going to go in the next 30 minutes, the next hour, the next 4 hours, the next day, which is really nice, which is this little guy here. You click that on and off if you want to see that. But I'm more interested in where I maybe set my stop losses. So these two lines here basically show your stop loss and entry prices, which you can actually drag around. So if we take this one as an example, if we wanted to set our stop loss, so we can just double click this here, or we can actually, you know, type in the values. So this one's coiled up. As you can see, we've got a sort of strong trend in the British pound, the cable against the Aussie. It has definitely been trending up. This is a 15-minute chart, by the way. Our entry level, we can double click here and we can say, okay, if we wanted to maybe have an entry around here or on the break of this line here, if we can see here, we can say, okay, we maybe want to enter, even say down here, we want to enter and we want our stop loss down here. You can just move that there, and what you can say is, okay, I want to risk, I want to risk say $100, or which will give you a lot size of 0.3, or I want to risk say 2%, which will give you, in my case here, that will give me a lot size of 0.03. For you guys who are wondering what that actually means, when I click on new order button, bang, my volume is 0.03. If that is different, you can just type in if it's 0.05, whatever, you can type that in. You can put in your stop loss. You can even copy and paste it from here, so you get everything right. Your take profit, you can decide, okay, I'm going to have it here, next level. In this case, you might be probably, if you're on the 15-minute chart, you might be looking at this level here. So you get the idea though, guys. You can basically play around with that, and you've got your pending orders where you've got a buy stop. In this case, the buy entry is above here, so you could put a pending order rather than a market order, in which case it would be a buy stop. It would be this value here. Copy paste, Control V, put it in, and away you go. Okay. In this case, in my case, it'd be 0.3, be 2%. If you thought, doesn't look like, particularly great setup, it doesn't tick quite all the boxes, drops down to 0.01. It does it automatically. You don't need to go to a separate website. If you're on a 15-minute chart, you really don't want to be going to a separate website, punching all these numbers, and it's this makes it so easy, guys, to manage risk. Okay, so that was a very quick one. So this is on the MT4 platform. It's the same on MT5 as well. Auto Chartist is also on there. It's got some really nice features. We won't go through that now. Don't really have enough time, but it does produce some trade setups as well, some patterns that does some prediction, which is really good. But for my purpose, I'm looking at it for risk management. It is my go-to. Okay, trade calls. Okay, probably a nice segue from our trade management or risk management into our trade calls, and how we've been going so far. We've made, I believe, 3 trade calls on our sort of podcast so far. We've had 3 trades. We've had 1 winner, and we've had 2 losses. Win rate 33%. Okay, this is why trade management is so important. I really need to stress this, guys. I have a win rate of 33%. Okay, that's not great. You look at percentage, you say, well, this guy, he doesn't know what he's doing. He's only got a win rate of 33%. Well, why am I listening to this guy? The importance here, right, with all professional traders, and they will admit to you, a lot of traders, professional traders, will have a win rate around this same level, but look at the profit. I'm up 0.4%. So although I've only had 1 winner across 3 trades, I'm still ahead. Not many traders, not many retail traders will be able to admit that. That means I'm taking more losses than I am winners. And that is the name of the game, guys. When you get into trading, you very quickly realize that you have to put your ego aside and you have to accept losses. When you jump on these webinars with these educators who are trying to sell you systems, pay the thousands of dollars, they're only going to cherry pick. They're going to show you that their system is 60, 70, 80% profitable. I'm calling BS on that. Professional traders, a lot of them will have a less than 50% win rate. What sets them apart is their profit percentage. They're not really focused on their win rate. What they're focused on is their profit and loss, and they're not focused on pips, guys. Forex traders will, especially in the seminars, and I know I've done it a few times to show you the pip runs, if you like, pip profit, but I've always stressed you're looking at percentages, guys. We shouldn't be talking about number of pips. We're looking at profit and loss. We're looking at this as a business. So again, my win rate is 33%. My profit is 0.4%. I am up. I'm not losing, even though I've had 2 losing trades. Now, why is that? Let's have a look. Okay. Other lesson here, every good trader journals his trades. So this is some of the trades that we've taken. Okay, we had the Euro USD, if you remember, it was based on sort of price action. We had a small stop on that one. So our loss percentage, 1%. Okay. Lessons learned. For all the losers, you want to say, how do you think you went in that trade? For me, it was actually a good outcome. Why? You might say, well, Graham, hang on, you lost on that trade. Why was that a good outcome? Well, it's a good outcome because what you're looking to do is also follow your trading rules. Don't let your bias take over. Okay, you might have a bias, but you have to trade your system, and you put rules in place. So for me, I followed my trading rules. I followed my trade plan. I didn't move the stops. I followed my strategy. So in this case, it was a tight stop, 1% loss. Move on. Next trade. Next trade, Euro beat JPY. Okay, we all know what happened there. The Euro, Lagarde stepped in, created this massive stimulus plan. Suddenly we've got strength. The Euro went against us. We took a full 2% position on that. We lost. Again, we followed a trade plan. We didn't move the stops. However, what I am saying, and I have, after placing that trade, what I did, and I carried through on, is I actually stuck to the 15-minute and 30-minute charts. Okay, I'm scalping off the lower time frames because of the volatility. Okay, the daily charts just weren't cutting it for me. So what I've gone down to is the 15-minute is a very good time frame to trade on Forex. I'm loving that time frame at the moment and taking some very good trades. So here we are, we're at 3% down. Taking a loss, move on. Where did we go? We were on Pfizer, we're on stocks, using the same systems. We're using the Kilted Strength Mirror, albeit I was using one of my other indicators, but it's still price action. We're still using the Kilted Strength Meter. Bang, 3.41% winner. Okay, lessons learned there. Watch out for overhead resistance. So I jumped in for you guys who took that trade, jumped in and said, look, we were looking for this to go through some of our rules. One of my rules is, let the trade run until we get the red bar appearing. We did see this overhead resistance. I called it out to you guys. I took full profit when it reached $37. And guess what? Even with the bull run, it's actually pulled back. As of close of this morning, it's actually pulled back to $36. Is some people still in that trade? Yeah, they may well be. It's how you see it. I certainly saw the overhead resistance and got out of the market at $37, banked a nice 3.41%. So that's why I'm ahead. Follow the rules, follow your strategy. There's never an issue taking profit. Okay, it's all about percentages, guys. Okay, so we'll move on. I've spent probably enough time there, but I really just wanted to stress the importance of risk management and show you why it's important as part of your strategy. Okay, next up we will look at what's Kilted Trading looking at right now. Okay, so it's all popular one. I'm getting some really good feedback from you guys in terms of how I'm looking at the market. I think folks are picking up some tips and tricks, which is really good. Thank you for the feedback. So let's jump to it. Okay, JB Hi-Fi. We're talking Australian stock market at the moment. Some trades that I'm really liking at the moment. For this one, I jumped in at $35.5. Saw the uptick here, Kilted Strength Mirror. If we look at our Kilted RSI, we dipped down here, but look, we've pulled up. Look at this strong move. So this has really been a bull run. It's done nothing but point upwards. We've had our pullbacks, and you know, look at the time of this thing. We had pullback here, we had a bit of a pullback here, and then we've got a run up, pull back into here, into our support zone, then the push up, and then we've reached our sort of resistance line, and we've come back down. And this was the sort of February, March time when we've had the full sentiment push down in the market, which dragged it lower. But we all know JB's doing pretty well with those folks all working from home, working to, you know, needing their technology to stay alive in the workplace. So we've seen this uptick. I'm still looking for, you know, a continued move here. My target was around $40. We hit that pretty quick. I'm currently at 15.29% there, which is nice. I've moved my stop so that I'm not going to lose money, which is good. So I'm going to let this run. I have a profit target of $50 on this one, guys, which will produce a really nice return on investment there. Stocks take a little bit longer for those trading Forex like myself. Stocks are a little bit boring, a tad boring, I have to say, but just easier to pick. I traditionally do probably a lot better in stocks, it's fair to say, than Forex in terms of return. Takes a little bit longer, but there we have it. JB Hi-Fi is one that I'm in. Guys, it's not too late to get in. We're around about the 40 at the moment. It's still ticking up. You can see there we've just come through the thin white line there. We're still pointing upwards here. First target, let's see what we're looking at here. First target, initial target, we're probably looking around here. $43 is probably where I'll be, maybe looking to take some risk off the table. First target, second target, $50. Okay, let's move on. Second stock we are in is TE Connectivity. Now this is telecommunications. In general, guys, telecommunications, healthcare, US stocks are the go-to. I got in this one at $77.40 on the trend pilot. We can see an uptick here on the Kilted Strength Mirror. We've got our ISI pointing up. We've had this sort of bull run. Careful of overhead resistance here, coming in at sort of $100. I will put on a stop on here. Probably around about 87, 86, probably around this sort of support level, which means I'll not be moving, losing money to manage some risk there. First target, initial target, we're probably looking at $100 mark, just shy of this resistance level, but I'll be certainly keeping an eye on the Kilted RSI here, getting up to around this level. So we do have a little bit to run. You can see there the traditional RSI here, these dotted lines are your 70 and 30. So we're in sort of moving into the overbought condition here, but we're using these lines here to give us an indication of where it's likely to run into a little bit of exhaustion. So we'll be keeping a close eye on that one. Currently up 17.62% on that one. Which brings me to my last point very quickly, guys. I'm looking at a service which is probably those who are perhaps a little bit lazier in the market, who are just looking for sort of stock picks. I'm looking at open a Telegram channel or Discord channel to clients. And what I'm thinking about is those who purchase the indicators will get free access to that. So that will be all of my sort of trade calls that I take myself to get you guys a window into that. To now, whether that's on your if you've got self-managed super, you can take some of the trades that I'm looking at to, you know, snag some of these nice percentage gains, and let you guys have that for free. And for those who are not really interested in the indicators and maybe like to take more of a passive approach to trading, I'm looking at maybe charging a monthly or a yearly service, a small nominal amount, so that you guys can get some of the trade calls, so you can just go onto your trading platform or your broker, phone up your financial planner or broker and take some of these trades with us, so that you don't need to get too involved. I know there's a few folks at different levels with investing and trading, so we'll try and accommodate that. Thoughts on that, guys? Let me know what you're thinking on is of that, and if that's something that would interest you. If it is, I will look at setting up a Telegram or Discord channel for those guys who have purchased indicators. And for you guys who, you know, are a little bit baffled by all of this, I know there's a lot of technicals in here, and you just want to know the trades we're taking, particularly in stocks, then more than happy to invite you into our Telegram Discord channel for a small fee, and you can trade alongside us, and more I guess a passive approach. So that's it for this week, guys. Hope you've been doing well in your trading, and looking forward to continued easing of some of the restrictions around the world. Stay safe. As always, look after your families, and we will talk again soon. Thanks for your time, guys. Bye-bye.